How billionaires sidestep taxes. Please like, share, comment, subscribe. ProPublica uncovered a shocking truth about America's ultra-wealthy. They have mastered the art of legally avoiding taxes. Drawing on the largest trove of confidential tax data ever obtained, the series revealed strategies that allow billionaires to pay far less in taxes relative to their immense wealth than most Americans could imagine. Now, let's dive deeper into the 10 eye-opening techniques these elites use to shield their fortunes. At the heart of the wealth tax disparity is the concept of unrealized gains. Billionaires like Elon Musk, Jeff Bezos, and Warren Buffett have built some of the largest fortunes in history. But here's the catch. They're taxed primarily on income, not wealth. By avoiding selling their stock holdings, they steer clear of income as defined by the U.S. tax code. Instead, they borrow against their wealth to fund their lifestyles, and borrowing, unlike selling, isn't taxable. Buffett defends his actions, saying he'd rather his wealth go to charity, while Musk responded with a cryptic question mark. For some billionaires, retirement accounts become treasure troves. Peter Thiel, co-founder of PayPal, grew a Roth IRA, designed for modest savers, into a $5 billion fortune. This loophole allowed Thiel to shield billions from taxation, showcasing the startling gap between the system's intent and its exploitation. Not all billionaires rely solely on long-term gains. For high-frequency traders like Jeff Yass of Susquehanna International Group, the problem is clear. Short-term trading income is taxed at a higher rate. But Yass found ways to reclassify his earnings, turning high tax rate income into lower tax rate gains. Over 6 years, this tactic saved him more than $1 billion. While his firm claims compliance with the law, the ingenuity of such strategies highlights the vast resources devoted to minimizing taxes. Owning a sports team is more than a status symbol. It's a tax haven. Billionaires like Steve Ballmer, owner of the Los Angeles Clippers, can write off massive deductions regardless of whether their teams turn a profit. Team owners even depreciate player contracts like factory equipment, taking deductions twice in some cases. This disparity means that Ballmer paid a lower tax rate than some Clippers arena workers earning $45,000 annually. Ballmer insists he pays what he owes, but the system's inequities remain glaring. Certain industries are tailor-made for tax avoidance. Real estate magnates and oil tycoons benefit from breaks that can erase their taxable income entirely. These stories reveal how industry-specific rules create vast disparities in tax obligations. Even billionaires' hobbies can become lucrative tax shelters. For some, it's thoroughbred racing. 6 Kentucky Derby horse owners collectively claimed $600 million in write-offs. These cases demonstrate how the wealthy turn leisure pursuits into financial advantages, further widening the gap between them and average taxpayers. Sometimes, billionaires don't just exploit the tax code, they shape it. Wealthy donors who supported Republican politicians received significant returns on their investments through the 2017 Trump tax cuts. Some business owners even reclassified their income to maximize these new benefits, amplifying their savings. Among the top 400 earners in the U.S., the wealthiest managed to pay surprisingly low tax rates. Tech billionaires and private equity executives excel at using investment income, which is taxed at a lower rate than wages. Even wealthy politicians, like the governors of Colorado and West Virginia, take advantage of such loopholes. The most startling revelation might be this: at least 18 billionaires qualified for stimulus checks in 2020. By reporting incomes below the $150,000 cutoff for married couples, these individuals demonstrated just how little of their wealth the tax system recognizes. It's a stark example of how even government aid intended for struggling families can find its way into billionaire pockets. Finally, we uncovered how the wealthiest families ensure their fortunes endure for generations. Trusts allow them to transfer billions to heirs while avoiding estate taxes. These loopholes reveal how the wealth of the elite remains untouched by the very taxes designed to curb inequality. These revelations expose a tax system that's anything but equitable. While most Americans dutifully pay their share, the ultra-wealthy use sophisticated strategies to minimize their obligations, keeping their fortunes intact and growing. The question now is whether these loopholes will be closed, or whether the divide will only deepen.